Hey folks, this should be a very quick and easy video because sometimes in the markets the simplest and most straightforward answer is the answer. And we've seen a massive dump yesterday with the C on just before. Actually, screw it, I'm not going to delete, I'm going to carry on. Yeah, so yesterday the CPI numbers came out and the market dumped. I'm talking about cryptos. And we then had a pretty meteoric reversal of that dump. Well, in my case, it's a relief rally. Now, I don't often tune into YouTube and crypto Twitter, etc., but I am seeing a lot of people calling that this is the end of the bear market. It's the beginning of the bull market, and it's up only from now on, and Uptober and all that bollocks. Not going to happen, folks. We are nowhere near the bottom. Nowhere near. And when you look at things on a very simplistic way at the moment, you have to understand that, one, the inflation figures that we get, the official inflation figures, are utter poppycock. They massage them so much, it's ridiculous. For a start, that theoretical basket of goods that we all use on a daily basis, they are constantly tinkering with it and doing hedonic adjustments and different weighting, etc. And when you look at everyone's monthly outgoings, what is the biggest outgoing? It's rent and mortgage. Well, they got rid of rent and mortgage from that CPI basket freaking decades ago. And so the real inflation figure is a lot higher than it seems. But it's interesting that even with this doctored inflation figure, it's still way higher than people were expecting. And so what's going to happen? If you look at the chart, inflation figures are really spiking. So all central banks are obsessed with this 2% Goldilocks figure. It's a bit of a fallacy, but they're obsessed with 2%. Now, what's not going to happen is the market is not just going to drop back down to 2% inflation. You can't do that. There are lots of levers a central bank has to deploy for that to happen, and it takes time. Sometimes, like if inflation is 6, 8, 10%, to get back down to 2, it'll take a couple of years at the most brutal, because typically the way that you curb it, is you hike rates up. So here's the long story. We have rising inflation, hotter than most people thought, which means that the Federal Reserve are literally forced now to either do another 0.75 base rate hike or more this month, maybe next month. The UK is looking like it's going to do the biggest one it's ever done. So rate hikes are still going to continue. So the Fed isn't going to pivot yet. They're not going to turn on the printing press. They are literally stuck. They're stuck. And when that pivot eventually comes, it's not going to be turning on the cash printer. It's just them going to blink. They're just going to go, oh shit, and then they'll pause rate hikes. So all it takes is for the Fed to go, actually no rate hikes this month, we're just going to pause and see what happens. That will have the same effect. Hey, the chickens. We've lost about 14 chickens in the last couple of months, buzzards and foxes, and we have the two indestructible chickens, the bloody cockerel and indestructible yellow tag. I forgot her name, I call her yellow tag. Anyway, so everyone's expecting QE to commence. It's not going to happen. All the Fed needs to do is just go, oh, this month, no rate hike, and then the markets will all go risk on again. But that's not going to happen for a while. I don't think it's going to happen this month or next month. So what do raising interest rates mean? It means that more down. There's more falling. So I've got some hefty shorts on at the moment. So I took profit yesterday, then on the pullback I got back in on ETH on a short, and I just checked it today and it looks pretty grim. But this is simply a relief rally. That's it. I'm just going to turn my brain off now and just watch the market fall. So those of you who say that you like to counter trade me and fade me, good luck. Go long, I dare you.